Hi, you must have heard the term assets in accounting. These are really important because they help in generating revenue and profit for the business. In this video, I am going to explain you the meaning of assets in simple words along with different bases of classifying assets. Let's start. As per IFRS, assets are the resources controlled by the enterprise as a result of past events and from which future economic benefits are expected to flow to the enterprise. Don't you think this definition seems quite tough? So we will break down this definition and throw light on highlighted words: resources, controlled, future economic benefits to better understand the meaning of assets. As per the definition, assets are the resources. It means these are the source from which benefit will be derived. Let's take an example to understand what does it mean. Inventories are asset for the business. When these inventories are sold in the market, revenue is generated for the business. So observe, inventories are the resources. These are the source from which the benefit, that is the revenue, is generated for the business. Next, controlled. You must have either purchased the asset or have legal right over them in order to have control over the assets. For example, building, machinery can be purchased to carry on the business, or it is possible to take them on lease. In both the cases, business have control over these assets. Next example will be account receivable. Business have legal right over account receivable. It is their obligation to pay their dues. So through these examples, I am trying to explain you that you must have control over the assets. Future economic benefits. Assets will result in future economic benefits. It could be through generation of income, as we have already seen in our previous example that when goods are sold in the market, revenue is generated for the business. Next benefit could be cost saving. Suppose you have purchased a machinery with latest technology. Focus here, machinery is an asset. You have purchased a machinery with latest technology that is reducing the cost of production. So it is providing the benefit of cost saving to your business. Next benefit could be increased sale. The best example for this would be goodwill. Goodwill increases the reputation of the business, which will result in increased sale of the business. I hope through this example, it is clear to you how assets provide future economic benefits. Next topic is types of assets. Assets can be classified on the basis of convertibility, physical existence, and usability. Let's discuss each one by one. On the basis of convertibility, assets can be classified as current assets and non-current assets. Current assets, these are those assets which are expected to be used or converted to cash within a year. Take a look at some example of current assets: cash, accounts receivable, inventory, marketable securities, prepaid expenses like prepaid rent, prepaid insurance. Let's discuss some example in detail. Accounts receivable. Accounts receivable are expected to pay back their dues within a year. That's why it is a practice to classify them as current assets. Similarly, it is the intention of the business to sell its inventory within a year. Prepaid expenses like prepaid rent usually amortize within the next 12 months. All these assets are either used or converted to cash within a year. Therefore, these are classified as current assets. Non-current assets. These are also known as long-term assets. These are not easily converted to cash within a year. For example, land, building, machinery, copyright, delivery truck, trademark. Organization has no intention to sell these assets. It will use these assets to carry on its business for more than a year. For example, machinery. Its useful life range from 3 to 20 years. It will be used to produce goods. Similarly, trademark. Trademark is a sign that helps the enterprise to distinguish its goods or services from other enterprise. Usually it has a validity period, but enterprise renew it again and again so that it can be used forever. So after observing all these examples, it should be clear to you why these are called long-term assets, because these are used by the business for more than a year. On the basis of physical existence, assets can be classified as tangible assets and intangible assets. Tangible assets. These assets have physical form. It means you can see and touch these assets. It can include either current or non-current assets, but they must have a physical form. For example, land, building, machinery, inventory, delivery truck, cash. As you can see, cash and inventory are current asset, while rest of the assets are non-current assets. All of these assets are classified as tangible assets because these can be seen and touched. Intangible assets. These assets lack physical existence. It means you can't either see or touch these assets. These assets can be acquired or created by the business. For example, goodwill. Goodwill is created over time due to the good reputation of the business, whereas it is possible to acquire the patent from the legal owner. Now let's take a look at some example of intangible assets. Patent, brand, goodwill, copyright, trademark. Let's discuss some example in detail. Patent. It is an intangible asset. It is an exclusive right granted to the owner to produce, market or sell the product. The owner have the legal right over it, and he can exclude others from producing or using such invention. As you can see, patent can't be seen, but it is providing the economic benefit to the owner. Therefore, all of these assets are classified as intangible assets. On the basis of usability, assets can be classified as operating assets and non-operating assets. Operating assets. These assets are really important as these are used to carry on the business. These assets impact the performance of the business and are used to generate the revenue for the business. For example, inventory, building, machinery, land, delivery truck, cash. As you can observe, all of these assets are really important to carry on the business. For example, building. It is necessary to have a building to set up a business. Machinery is used to produce goods. Cash is the lifeblood of the business, which is needed for carrying on the operation. Therefore, all of these assets are classified as operating assets. Non-operating assets. These assets are not essential for the operation of the business but generate income for the business. Let's understand this with the help of some example. Vacant land, outdated machinery, marketable securities, excess cash. All of these are examples of non-operating assets, as these are not used in the daily operation but generate income, which is known as non-operating income. For example, marketable securities. Company generally invests its excess cash in these securities to generate a fixed low-risk return. These securities can be easily sold in the market as and when the need arises. The revenue generated from the securities is reported as non-operating income. I hope after watching this video, it is clear to you what are assets. Thanks for watching.